Welcome to FOMO Consulting for your daily AMC stock analysis video on Tuesday, June 15th. Ladies and gentlemen, we are 2 steps away from the launch. I truly believe that. And as always, the apes are winning, the diamond hands are winning, most importantly, the retail investors winning. So if you find this video informative and entertaining, please like, share, certainly comment, and most importantly, subscribe. It is a newer channel and I would appreciate your support. Let's get into the video. Thank you as always to each and every one of you who has liked, shared, commented, and subscribed. It means the absolute world to me. Thank you. Start with a quote. It's a very slow process. 2 steps forward, 1 step back, but I'm headed in the right direction. By director and actor Rob Reiner. Certainly that is the way it feels. We are going 2 steps forward, and some days we take 1 step back, or sometimes on the chart it feels like we take a step back, but we are always heading in the right direction, which is up. Always good to see. This is updated through yesterday's price action. It's about a day behind, but you can clearly see it is exceptionally bullish over the next 10 days. And as you can see, it was relatively accurate attacking that $60 level. We closed just below it today. But it's not too far off the truth, right? And by the end of the week, it would appear it's showing somewhere near the mid 70s to $80 level. We shall see. Well done, German apes. This is a worldwide global movement. All corners of the globe are participating now. The ape influence, the diamond hand influence, the retail investor influence and movement is taking hold. Congratulations, you had a heck of a day, up 5.8%, $48.73. Congratulations, German apes. So let's look at the overall broader market and how it affected AMC today. Dow was down 93 points, NASDAQ down 101 points, and S&P down 8 points. There was some recovery in the afternoon, but major sell-off at the opening bell. A lot of anxiety around inflation. The PPI data came out, quite frankly, worse than expected. The highest increase in the history of producer price index. So overall, just a lot of anxiety. The Fed is speaking tomorrow, Jerome Powell. That always puts jitters in the market. So AMC closing green, and the way we did today, I could not be more pleased. As you can see, the Russell 2000, which we are linked to, had the same sell-off. A lot of selling pressure through ETFs and just the sector as well, the index, excuse me. Overall, just a lot of heavy selling pressure today throughout the market. As you can see, the SPY was down, Dow was down, the index linked to the NASDAQ was down, just a lot of heavy selling pressure and a lot of red in the market. Let's look at crypto. Overall, crypto generally down today, between 2 and 4%, depending on which coin you like. But overall, no surprise there. Again, broader market, heavy selling pressure. So let's look how AMC did today. AMC was up $2.13 at close, $59.04, up 3.74%. And versus the broader market, we certainly outperformed. We show the strength of the apes and the diamond hands and the retail investor today. We are up after hours, at least at the time of this recording. I know there's been some sell-off, but looks like we're recovering. But the trend lines I've drawn earlier in the morning, once we broke 60, we found consolidation and support. Obviously, they had other thoughts to short attack us down. Certainly, they were successful, but if you look, they do not have the firepower they used to have. Certainly, they shot it down $5-6, but that's about as far as they could get. We did recover through the afternoon and consolidated very solidly. We are in an attack position right around the $58 to $60 level, and clearly all of the indicators just kind of cooled off today after 2 15% rises Friday and Monday. We actually needed to. Overall, I could not be more pleased. And again, you can see how AMC trended to the Russell 2000. We certainly outperformed that. And as you all know from if you were up early, you could see 4 a.m., You could see all the antics going on, all the tactics. They were trying to make it look like a sell-off pre-market, keep us red all morning long. They are doing the same thing after hours. They are putting up sell walls, strategic points just to keep it down, keep it green, or excuse me, keep it red, just as a psychological tactic, but they will not win. And as always, we were the most active, at least as of recently. So let's look at some key levels here. So overall, obviously $59, $60 is a really important key level. We found support and we own that $40 level. At this point in this week, I am not concerned about that $40 level regarding the options. I believe we own the floor. We will certainly see more attacks, but we own it. And that red line, I believe we have two steps, as the title to this video would allude. We break 60 and hold it. We are quickly to 70. We may find a few bumps in the road and a little bit of selling pressure, but we have two major levels to break. I believe we will break 60 tomorrow and hold it based on the charts, and I certainly believe 70 is in play. And once we break 70, I believe that will break their backs. So overall, you can certainly see on the 4-hour chart, we are bullish. We have turned the corner. We are heading upwards. MACD had to cool off. We are about to cross over the signal line again. The RSI got shoved back into the channel, which is a good thing, but we certainly have some more room to run. Let's look at the daily chart. The daily chart is absolutely beautiful in my opinion. Obviously, the last week we had, 3 red days in a row. We got pressed down. We have recovered from that. Again, the MACD had to cool off. It is moving upwards. Alligator's mouth is wide open. And the RSI got put into the channel with a lot of room to run. Looking at the weekly chart, you can just see the stair stepping. We are increasing the pressure on our opponent each and every week. Cent by cent, dollar by dollar, step by step. This is a process, 2 steps forward, maybe 1 step back from time to time, but as long as those steps keep going upwards, we continue to put the pressure on our opponent. So this is just a bigger picture view, and what I want you to look at is just the overall trend we've been on over the last 3 weeks, going back to late May. When we were down talking about the $14 level, it's always worth zooming out when in doubt, just to make sure we have perspective. As you can see, I mean, we were battling that $10 to $12 level. We finally broke the $14 level. So nothing is impossible. 60 is the new 14, right? We fought for months fighting for that 14. We have all the momentum, we have all the power, we have all the consolidation. We are clearly trending upwards. We break the $70 level. As you can see, we are forming somewhat of a wedge pattern. We break it, which I believe will be over the next week, if not sooner. We are off. So again, let's look at GME. GME is getting beat up a little bit. I think they're trying to separate us because they know we run together. They're shorting ETFs that are linked, AMC and GME. GME has kind of been the target to pull down, but I believe GME will recover in short order. But if you look just from a bigger picture, when in doubt, zoom out, GME is perfectly positioned for a run in the near future. It is not a dead cat, as Trey would say, and I certainly feel very positive around GME's near future. AMC short sellers lose $512 million after Monday's rally or text. We added to that total today. They could be approaching $700-800 million in losses, if not more. Again, every cent matters. Every level matters. We are continuing to put pressure, and there's some really big news tonight. So again, pretty cool article. Wild popularity of GameStop and AMC leads to ETF distortion. This is around the weighting of AMC and GME in the various ETFs they're connected with, and how their performance has shifted a lot of the weight. Interesting article. Wall Street bets stocks in retreat as AMC gains amid Twitter campaign. Keep it up. Social media means all the world and all the difference. Certainly, there's a lot of misdirection. Obviously, they're trying to get our attention off of AMC with Clove and Wolf and you name it, whatever, but we're not paying attention. AMC is the focus. Huge news, DTCC 005 was approved tonight, or late this evening anyway. That is absolutely fantastic. That should remedy, or if not help, a lot of the shorting, naked shorting. Do your own due diligence, but as I understand it, it also remedies, at least in my short read of it, a lot of the deep in the money options to kind of bury the FTDs, what have you. It is a fantastic accomplishment. It's effective immediately, and it will hopefully scare the shorts into submission. So let's look at the Vortex data. Overall, short interest increased today 1.73%. Again, this is T+2. So this is 2 days behind, but I have no doubt based on the trend lines, it is increasing daily. 3 million short shares available. Then they used every one of them today. Obviously, with the heavy selling of the broader market, they found an opportunity in ETFs and other platforms to suppress AMC, certainly hammer GME when they could. GME made a fantastic recovery. But overall, we still have 432 institutional owners. There are only, just as a reminder, 9 short-only institutional owners, at least as of the end of March, and 13 net filings. This is updated pretty regularly, but there are 26 long and short, which is obviously hedging. So we have a lot of ground to gain and a lot of work to do, but we are certainly each and every day continuing our upward trajectory and keeping the pressure on the shorts. Shares on loan has also gone up a pretty good bit over the last couple of days. We're 87 million shares on loan. Believe that if you would like. Cost to borrow is 3%. Utilization is holding steady in the low 80s. Again, do your own due diligence. Some of these sources are flawed, but nonetheless, it's what we have to work with. 282 million today, about the same as yesterday, a little less in volume. So what I want you to look at is the short interest trend. This is what I showed you yesterday. FTDs are yellow volume bars. The borrowed share volume is gray, obviously the price action, and the short interest trends. So what I want to show you is how this evolves. So new data came out today, as you can see to the right, more FTDs, but you can see there's far less, at least reported. And again, this is about 2 weeks behind, but bear with me. But what I want you to do is focus on this. Let me show you this. So this is naked. Only the borrowed share volume bars as it relates to the price action. So if you look going back when we were trending in the $8 to $10 channel, what seemed like an eternity, you can certainly see where they were borrowing and then slamming the price, keeping it suppressed, keeping it down, right? Let me show you this. Now keep in mind, the data kind of trends behind, the FTDs trend behind the borrowed shares a bit. That's the FTDs. Again, price action is all alone, but you see when we were trending in that $8 to $10 channel, look at the pure amount of FTDs to keep that price suppressed for all of those months and all of those weeks, along with the borrowed shares. Absolutely incredible. But as we've ran up in price over the last 2 to 3 weeks, you see where the FTDs have fallen off substantially. However, the borrowed share, legitimate borrowed share volume has picked up. You do your own due diligence, as you can see. You see where the borrowed share volume has actually picked up and FTDs have actually gone down. Again, you make your own assumptions, do your own due diligence. However, in my opinion, the short trend line hypothetically should be going up based on more borrowed shares on loan, right? If you look where we are currently with the volume that they're borrowing at this time, the short interest should be going up. Again, just you make your own mind up around this. I just thought it was somewhat interesting, the correlation between the true borrowed shares, trend lines going down, and FTDs. Again, reminder, quadruple witching is this week, ending Friday. Expect a couple more days of volatility, no doubt. So let's look at the options. So we are now at $59. I believe if you look at the consolidation of calls at the yellow trend line, we have about 10,000 in open interest at the $65 level or so. Break 70, you put 21,000 calls in the money. Certainly a key level. We break 70, off to the races. If you look at the $73 strike, there's another 30,000 contracts that all have to be hedged for, and I do not personally believe all of the options have been hedged for at this point, just my opinion. But currently at $59, there are 484,000 contracts in the money on the call side, plus the puts. 2-to-1 ratio, call to put ratio, certainly bullish, but healthy, looks good. And then a lot of huge bets going in on the options expiring this Friday. Calls and puts in the 70s, both pretty much. A lot of big money going in. Expect some more volatility over the next couple of days, certainly. Always fun to look at. This is actually trending up towards the $1,500 level each and every day. We are certainly heading in the right direction. And as always, I have skin in the game. I was green, as I'm sure you were, but it is not enough. We'll finish the job. Let's close with a quote. Apology without changed behavior is just manipulation. We have certainly dealt with our fair share of manipulation. Our opponent has been popped several times for different infractions to the rules. Apology, yes. Paid fines, yes. Continue with manipulation, absolutely. But DTC 005 and being implemented effective immediately today should really change some of the dynamics around that. I'm sure other people will do specific DD around that, and I'll be watching as well. But certainly today was a great day. Thank you as always for watching. If you found the video informative and entertaining, please like, share, comment, and certainly subscribe. It's a newer channel and I would appreciate the support. But as always, I hope your life is full of green candles. Take care. I'll talk to you soon. Bye-bye.